Hey guys, Mike here. So we just had two big stocks report earnings, and we're going to jump right into those right at the beginning of the video. Also go over something you might not have noticed, but it is something you want to keep an eye on because it definitely will affect a certain sector of stocks for sure. And we definitely want this to move down if you're in those stocks. But when you look, today was all about the Magnificent Seven. We saw the Qs up 1.25%. Might not have noticed, by the way, something about the NASDAQ composite, which I'll point out to you. But the reason why this is important is seeing that, because they obviously, most of them report earnings this week, right? And what are you seeing right now? The concentration, once again, we talked about it was a year and a half ago, is at a multi-decade high, as you can see right here. These are the market caps of the 10 largest S&P 500 companies as a share of the index total, around 38% now. You look to the right, that's the market cap of the largest stock relative to the 75th percentile of stocks, higher than we've actually ever seen it. And so, again, that's why this week is so important when it comes to earnings, because if they don't do well, then oh well, then the market's going to go down. That's the thing, as I always said for like 2.5 years, until these stocks break, you can't really bring down the market significantly at all. That's why the bears have not been able to push this through or go down and have this like this crazy ass crash everybody's been calling for forever. This is why, because they're loading up into these stocks, and that's kind of like safe havens now. Because what's interesting, when you look at the earnings growth, it's been slowing in the Mag 7. You can see it right here. This is the S&P 500 earning growth year over year going up, and you can see the Mag 7 just kind of stuck. And we've seen that on the earnings calls. I mean, especially like Apple. I mean, give me a break. I think Apple's one of the ones that drags us down more than anything. But, you can see going through 2023, they were going up, started coming down right there, Q3, Q1, and the reason why is because of the comparisons. That's why the comparisons are so huge. Look at that. Back in 2023, so of course, hard to beat that. Now, when you come up here and you look at Google, they just reported earnings. We talked about this inverse head and shoulders. We brought that trend line. Boom. It was going to be heading up somewhere towards the neighborhood. We'll just pull this up here, right around like 190, somewhere in there. And so, of course, we go to the extended trading hours. You can see big old God candle right there coming up. It's coming down a little bit now. So big move up, already hit 179. It's right there. And after hours, they reported good earnings, right? They beat both top and bottom line. Didn't see anything wrong with the guidance at this point in time. You can see that's where it's supposed to be going. So that trend line, that ascending trend line, will be resistance as it goes up. And Google's not like Nvidia or some of these other stocks that go up just like crazy, 10, 20, 30%. So don't be surprised, obviously, if you see some kind of pullback. That neckline will be the support if it does come back down for whatever reason, if they have to say something crazy on the call. AMD spiked up to begin with. They beat top, bottom line, all that good stuff. But remember, this is a semiconductor. What do they care about? They care about guidance. Now, we talked about this nice little pop from here because you were coming into double support right there, plus a nice discount on the fibs, and obviously had a nice move up right here. But of course, less than 5 minutes after I actually uploaded this right here, and you can see they were up about 1% maybe. Well, they gave guidance, and of course, it's all about what the market likes, right? And immediately, dumped right back down, getting bought up as I'm recording this though, so no worries about that. And when you look at it, the thing is, they just don't give the kind of guidance that Nvidia gives, right? They don't, they look for this crazy, we're going up $1 trillion every quarter, and I'm exaggerating or whatever it is. But when you look at what they come out with earnings, obviously I said, top and bottom line beat, still growing revenue and all that good stuff. But it was just the guidance, and they gave good guidance, but it just wasn't what the market was looking for. So they chose to use an excuse to sell it down, and we'll see if they just buy it right back up. Starting tomorrow, of course. If this is the case, let me be very clear. If the semiconductors come down, this one I have, but if the semiconductors start to rally, because NVIDIA is not really down too much after hours on this right here, then the Qs, and especially if Google drags the other Mag 7 up, will go to all-time highs, right? It was only 0.28% away today, and so it ain't going to take much to push that up. You saw it up 1.25% a day. That's if they push the Mag 7 up. And what, again, that's all-time highs over here. What you might not notice was the NASDAQ composite, which holds a lot more stocks, it did hit all-time highs today. So it is done. So the S&P has set multiple all-time highs. Now the NASDAQ composites hit it. The Dow's hit a new one. So it's just really IWM and the Q's barely lagging. Now, something to watch out for here is the 10-year. We talked about it right here, talked about it right here, and it continued to move up this trend line. I said when it gets up to that resistance slash downward trending line right there, expect a rejection, and it was red today. One thing that probably helps that is you get the JOLTS job openings report, right? It comes out. Here is the job opening, still continuing to shrink right there. That's what was normal from 2018, 19 days right there. I don't know what norm is now. Then you look at the quits rates, that's coming down. So a lot less people are willing to leave their job right now. And so that's something else you're going to see right there. So that's coming down. And then when you come over and look at the layoffs, you can see this right here actually is ticking up on the levels right here. Okay. And so, you know, what's going to be the new norm? Again, I mean, Visa just announced they're going to lay off a whole bunch of different contractors and everything. Everything has like a 1,400 or something like that. And so we've seen this from these bigger companies, right? And so here you can see it really was just range bound for like 10 years. Now we've been picking up. But what's the new norm? Like, was right beneath it the consolidation? Now it's the move up. Like right here, you'll usually see a time where you get this consolidation for like a number of years and then you get a big spike. That's what we don't know. You know, we're looking at this stuff. But it is important when you look at this data that's coming in because it's been coming in hot as can be. And the market's like, oh boy, you know, what's going on? Inflation is going to come back and all the economy is stronger than it's supposed to be. And when you look at this, you want the 10-year to come down if you're in certain stocks, right? So if it starts to come down, once it breaks this trend line right here, which I believe it did actually at the very end of the day right there, if that has a significant pullback, obviously bonds are going to do well. TLT will finally see a resurgence back up. Something even bigger than that is going to be IWM, right? Because if the 10-year can come down, you're going to have mortgage rates coming down, lending rates coming down because they follow the 10-year, right? And so you can see when the 10-year takes a significant move down, obviously you can see right there, IWM went crazy. But you can see normally it's not a perfect inverse relationship. But you can see when it dipped right there, even though this was super, super volatile, you know, the final move up was like 10, 12%, I believe it was, if I'm not mistaken, when it bottomed. And then when the 10-year started to come back up, what happened to IWM? It just kind of sat there and went down, traded sideways, and it got a pot with BTC, and then it went down. So when you look at this time frame, it's actually zero. Like they didn't lose none, didn't gain none. And so if this starts to drop a decent amount, maybe you can see small caps, right? Because remember, seasonality for small caps going November, December is actually pretty darn good. Now, Tesla right here, obviously still continue to sell down about 7-8% since it hit that high right there. Watch 250. I know a lot of people will be sitting there. They're going to be sitting there waiting to sell cash clear puts on this thing. I think that's going to bounce right here because it will be in this daily fair value gap. And that's really going to be key right here is to watch because, again, if we come down 250, people expect to bounce. But if, you know, I'm going to move this down right here to that level right there. If we come down 250, most people are expecting this to bounce, probably will, because it'll be now, what, a little over 10% at that point in time. So if we break that trend line, we're going back up to where it got rejected before, 268, then 273. But the big thing to watch here is the daily fair value gap. Watch how it reacts. If it does, okay, come down. I'm saying if. Watch to see if it cuts through it or does what it's supposed to do and start getting reactions off of it and just slowly grind down right there and get its bounce, okay, as it helps mitigate it. Watch that. That is key. Now, somebody had asked me about this. I'm going to go ahead and put this in here, but it was Enphase, right? Enphase had a big dump during earnings. Now, understand, you see how this is major support for quite a while, right? And then you get a big drop down, gets rejected right there and goes down in this area right here. And it's been coming back up in the last few days, right, since earnings. Now, if you want to know what Enphase is going to do, look at Oxy. It looks identical charts, right? You got this crazy kind of support right here. Warren Buffett's buying into this level and boom, boom, boom. And then finally it breaks down, comes back up, and it gets rejected because that will be heavy, heavy resistance, right? And that's what happened to Oxy. When you come over to Enphase, if it does move up there, you expect this is going to be heavy resistance. But the move up, if it decides to close that gap, is a really good move up. But that's what you need to be expecting if that's the case. And it looks like maybe 74, 75 is going to hold. I believe that's what that level is. And so now get into earnings and data tomorrow. Eli Lilly, Caterpillar, Humana, ADP right there. Obviously, and after hours, the big boys. Microsoft, Meta, Coinbase, Robinhood, Etsy, Riot, Roku, Carvana, Starbucks. Boy, that's a mouthful. And so you get into the data. Here we go with the payroll stuff. ADP non-farm employment change. Advanced GDP quarter over quarter. Pending home sales. Crude oil inventories. Okay, guys? So it's going to be Another busy one for tomorrow. We'll see how we're going to open up tomorrow, if it's going to drag the Mag 7 higher or we're going to get a push down in semiconductors. So it'll be a fun one tomorrow. At least we know it'll be volatile as always. So please hit the like and subscribe button on your way out. Think about signing for the membership. What's the McDonald's combo right there? And I'll end up seeing you guys tomorrow.